Hello and welcome to another day of swing trading with the day Tradestor. Today, if we take a close look at today's candle, you can see we opened up at 67.54, but it's just been a pretty much red down day all day. Now it's likely that we have a down day because people are taking profits after an amazing run of both the S&P 500 and the NASDAQ hitting all new highs several days in a row. And days like this are expected when the market gets a little excited like this, and we have several days of runs already. Again, after having, let's expand this back out, a 3-month run up. So for the markets to cool down a little bit, for some people to take some profits, this is common. It's quite normal. It's not a big deal for us since we are more long-term investors. We just happen to be trading a little bit more frequently than just buy and hold investors. All right, now, in reference to our buy and sell list, we certainly have some stocks that we did hit some sell triggers yesterday, and we received those alerts this morning. We have about 6 of those. But out of our more than 200 stocks that we look to hold long term, not a single one sent us a possible buy trigger. But before we actually start making any sales, I want to take a look at app. If you saw my video yesterday for app 11, you'll see that we had a big long down day, and I mean it was just a huge drop, and that was based on Bloomberg had released a report saying that app 11 is being looked at because of their practices regarding their data collection. Let's zoom this back in. And yesterday I had considered, based on that report that the SEC investigation at 11, I had considered selling based primarily on emotion, just in case this would go down more. I wanted to protect my profits. But I also said that this is probably it could be just an emotional drop because of the bad news. However, if you look at it, it's not really that bad of a news. It's just a report saying that app 11 is being looked at by the SEC because of some complaints. Big businesses receive complaints or make complaints to the SEC every single day. Or rather, big businesses are complained about to the SEC by consumers and other business partners every single day. So it's not uncommon for the SEC to launch an investigation into any big business. And quite frequently, it turns out that it's really not that big a deal. SEC completes their investigation, says there really wasn't that much wrongdoing, and the price usually goes up. But I'm assuming this price is going up for the same reason that I didn't actually sell any yesterday. People are realizing that it's not that negative a report, and therefore people are buying back into app 11. And to reinforce that idea or that belief, no analysts actually changed their long-term price targets for app 11 based on the report by Bloomberg yesterday. Now, this doesn't necessarily mean we're safe. It might end up turning back around on us tomorrow. Another reason it could be turning around is because smart investors and experienced investors know that investigations by the SEC into big business can take 2 or 3 years, depending on the scope or the severity of the accusations. And it's not necessarily the announcement of the investigation that is all that bad. It's going to be what the results are. That's what's really going to be a negative if it's negative results. So in the meantime, we'll just keep trading app 11 accordingly, and we'll make our decisions based on price action and price movement and price as it falls back and forth or crosses the fast-moving average and the slow-moving average, or as the fast-moving average crosses below or back up. So we'll just let price action dictate to us what we will be doing with our trades. All right, with that, we'll take a look. So app 11, this was one of the 6 stocks that we received a possible sell alert. The trigger was activated yesterday, and that was sent to us this morning. We received that, but we are no longer in a sell position. If this price had continued down, we would be selling some app 11. But we're going to take a look at Google, G-O-O-G, and zoom back in here. So you'll see The trigger that we're looking at is from the price of the fast moving average crossing below the slow moving average. That actually crossed on Friday, and we looked at it yesterday. However, prices moved back up. But typically, if you've been watching my videos, I like to sell when the fast moving average crosses below the slow moving average. However, we had price cross below while the slow moving average is in an uptrend. So both of these individual actions tend to cancel each other out. We have a price moving up, which cancels out the fast moving average crossing below the slow moving average. And right now we had price open up above both of our averages. And even though price is going down, we're still above both averages. So we're not going to be doing anything with Google. We won't be selling that. That'll just stay on the list. And we'll take a look at that tomorrow. Right now, we're going to take a look at Goldman Sachs. So Goldman Sachs is on our list. We've been looking at that since we had price fall below the slow moving average. However, the following day we had price go up. So this was not a continuation of the move of the price falling below the slow moving average. And then Friday we had price even move even higher above both averages, both the fast moving and the slow moving average. And then today we have price of the fast moving average has crossed below the slow moving average. So tomorrow, if this price continues down today and our candle is a lower candle, we're down here somewhere, that will be a continuation of price moving below our slow moving average. And if you're new to the videos, when I have that cross, I like to sell all of the stocks that I have. If I'm able to sell them at a profit, that'll be amazing. If not, then I'll create sell orders. And this is an example of what a sell order looks like. When prices fallen below our purchase price, we create sell orders. Since we are looking at investing as opposed to strictly day trading for profits, we're looking for investing to improve our financial independence and our wealth to be able to retire. We do not sell stocks at a loss. And I say we, and that's based on the idea if you are choosing to follow my particular strategy. So today we opened up quite high. We opened up higher than yesterday's candle close, but it's just been just like the rest of the market. It's just been a red down day all day today. However, price is not below the close of the initial candle that created the cross and hit the trigger, thus sending us a possible sell alert. If price is not lower, we just hold on to it, waiting to see what the traders do. You know, bears had pushed this price down for 4 days in a row until the bulls decided to get back in and buyers started coming back in. So right now, we're just waiting to see who wins. As long as price is higher, that's going to be the bulls keeping it up. And if price ends up going lower than the close of this candle, then that means the bears would have won. And we might be going down lower for a day or two or even a week or even longer. So we'll keep Goldman Sachs on our list of stocks to look at. And we'll take a look at it tomorrow and see where we are. Now, if price continues to drop or if the candle closes and stays below our fast and slow moving average and doesn't come back up, we will receive an alert tomorrow based on the fast moving average crossing the slow moving average today. That trigger occurred. And if the price stays down here, we will receive that alert tomorrow for that crossing of our moving averages. So we're going to take a look at JP Morgan, JPM. Zoom back in. That's a little too much. Zoom back in there. That's better. Hey, JP Morgan, just like Goldman Sachs, they are bank stocks. And some of the banks start reporting their earnings for the quarters next week. I believe they are on the 14th of next week. So this might just be a little blow off before the earnings. However, we have been in a downtrend for 1, 2, 3, 4, 5, 6 days. We had a little pause here on Thursday, so that was actually looking pretty good for us. But this candle takes us below the close of the candle that caused the sell alert We had price fall below our slow moving average. The next day we did not have continuation, and just like Goldman Sachs, even yesterday we didn't have a true continuation, but we do today. Current price is $307, and I currently have 3 shares. One is already sitting in a sell order, and I bought 2 shares at $297.98, so we will be selling 1 share in our active trader, and we're looking to sell 1 share. Current price is $307.11. Oh, jumped up to $307.21. Let's see if we get that. All right, so we just sold 1 share at $307. We'll just call it $307, and I bought it $297, so we're looking at a $10 profit on the sale of that 1 share. Another stock we're going to look at is Keysight Technologies, which is Keys, K-E-Y-S. They've had a big move down. That's a huge move. Now, I don't know if that's based on any additional news or if that's just in sympathy with the market. But it really doesn't matter. Yesterday, we had the fast-moving average cross below our slow-moving average. And when that occurs, if we have a continuation price down, when we absolutely do, we have a continuation in that price move and the fast-moving average crossover, we look to sell everything we can at a profit, as I just said earlier, and if we can't, we place sell orders. I will be able to sell 1 of these 3 shares at a profit, and the other one we will place another sell order. These 3 shares represent 3 out of 4 books, each book having 1 share. So we're looking to sell 1 that's already there. We're going to come down to 169.62 in our active trader. So we sold 169.62 for a stock that I bought at 167.68. So we're just going to round those to 167 and 169, and that is a $2 profit on that 1 share sold. All right, so now we're going to go set a sell order for Keys. There's Keys on our watch list. Right click in my Thinkorswim watch list. Sell. We're looking to sell 1 share. Now, the price that we bought Keys at is in the hundreds. So if we look at the first place, which is in the hundreds, we take 10% of 100. That's 10 cents, and we add that 10 cents to our purchase price. Making our purchase of 175.30 to 175.40. 175 and 40 cents. Good till cancel extended hours. Confirm and send. And there's our sell order for that last share. So we have 2 shares here and we have 2 sell orders. Okay, we have one more stock to look at from today's alerts, and that is Yum Food Brands. And we clearly had a cross yesterday of price below their slow moving average. We clearly have a continuation of that move. Unfortunately, the current price is much lower than my purchase price of $150. Not much lower. We're looking at just roughly $4. So it's $4 lower than our purchase price of 4 shares. I already have a limit order, and that's based on this price cross of the fast moving average and its continuation. We're going to set another sell order for 1 book. In this case, again, I have 3 shares, which is 3 books, each having 1 share. We're going to set a sell order for 1 book. So we're going to come into Yum Brands, right click in our watch list, sell 1 share, and we are going to take 10% of the first digit, which is the hundreds place. So 10 cents is going to be added to our purchase price of $150.81, making it $150.91. $150.91. Good till cancel and confirm and send. And there's my limit order for 2 of the shares. If price continues down over the next several days or however long it takes, if it does continue down, when the fast moving average crosses the slow moving average and we have continuation, we'll put another sell order for this last share. Now let's go ahead and expand. I'm going to expand this chart out. Yum is a choppy stock. You can see it just goes up and down and up and down and up and down. Right now we're in a downward position, so which is one reason I typically don't like to sell stocks. We never know the price action of any particular stock on any given day or week or month. One good positive sign that we have is that we have the RSI is dropping down to its lower end of the range, which could be an indication that this downward trend is almost exhausted. If we look here, we can see that when we started moving downward on this price slope down, we can see as it didn't really get down to the range, but it did get exhausted down here around the 143 price range before it turned around and started going up. So maybe 143 is another area of that will be resistance. Excuse me, it'll be support for price to bounce off of. Our strongest zone that we have in the last 3 months of it looking for an area that might be a strong turnaround for price is right here in this box area. We've got price that consolidated basically from July 14th to August 4th. So, you know, basically 3 weeks of movement that really didn't go anywhere. So that might be, this lowest range might be an area of where price was supported, and we had price turn around. And that, if I draw a line, well, we can just look at the y-axis, or excuse me, the x-axis. We can see if we drop down to some of the bottoms of these candles, we have 2 candles right here that is we're kind of low, and you can see all the way over we had price just almost reached that before the bulls took over and pushed price back up. So maybe this is the end of the turn. Maybe this was exhaustion. We'll find out tomorrow or later this week, depending on the price move and when we get the possible sell alert, if we do indeed receive one. And so that is everything on today's alerts list for sells. So we're going to take a look at yesterday's sell list, things that we didn't do anything with, and one of those is EW, Edwards Life Sciences. All right, so Edwards Life Sciences, we're looking at what, roughly 6-7 days here. That price really hasn't gone anywhere, and the reason EW is on the list is because we're still looking at this cross of price moving below our slow moving average. But we didn't actually have a continuation of that move. And now that I'm actually looking at the chart, none of this is relevant. I don't even need Edwards Life Sciences on my list because I already have sale orders for all 8 shares that I own. We have I'm fully packed at 2 shares per book, so all 4 books are here. And prices currently lower. So I didn't notice this over the past several days that I've been looking at Edwards Life Sciences. So now I'll just cross that off my list, and we will remove that, and I will not be looking at that again until we hit some triggers that we're able to sell some stocks. However, there is one thing that I do like to do when I do have price of the fast moving average cross back above our slow moving average, and we have continuation of that. I like to cancel all sell orders except for 1 book. So we keep 1 book active for day trading purposes. So we're going to now cancel the 2 most expensive books, or the 3 most expensive books. And so we're going to cancel this one at 81.89, and this is active. So if this ever gets sold, that'll be triggered, and I will start looking at as a day trading stock. If you're new to my videos, you'll know that you should know that I don't just show my swing trading strategy in here for long-term investments. I also day trade within this account. So with that crossed off my list and the sell orders canceled, we'll move on to the last one that I need to take a look at, and that is SoFi Technologies, and that is an online bank. We do not have price continuation of this particular cross of the fast moving average below the slow moving average. So you'll notice that I sold 1 book on the continuation of price moving below our slow moving average. And we're looking at Monday, Friday. On Thursday, we had a cross of the fast moving average below our slow moving average that hit the trigger. We received a alert on that trigger the following day, which would have been Friday. And at that opportunity, by my strategy, I like to sell everything I have that I'm making profits on. And if I'm not able to make a profits, I will create a sell order. However, I did not follow that strategy. There was no bad news on SoFi on why we had this long, almost 2-week downturn. There's definitely was no bad news specifically for SoFi. So this was probably just people taking profits. So I decided, I believe at this point in time, I would wait one more day just to see what happens. And if price had gone lower, I would have sold. But I held on and it's working out. It does look like that this was just people taking profits and we're back in. Because if I had sold here, I typically would wait until price of the fast moving average crosses back above our slow moving average. And then we would already be down $2, maybe $3 behind. So even though I have strategies and I have some pretty good rules in place, more than 95% of the time I do follow the rules. But in order to be a good trader, you just don't want to be completely mechanical. You also want to be informed and make as the best decisions that you can based on all of the information in front of you. The charts is just one piece of information. The moving averages is one piece of information. The MACD is one piece of information. The RSI is one piece of information. And news, absolutely, or the lack thereof in this particular case, is another piece of the information. So I made a decision. It seems to be working out for me right now, and we'll see if it ends up being true. If this continues going up, then it was a good call. If it turns back around and it drops down lower, then I'll just end up selling it at some point possibly that I would have sold anyway. So with that, I'll be crossing SoFi off of my list. I won't be looking at that again. And we're going to take a look and see how much we actually made from the sale of the JP Morgan and the Keysight Technologies. We have a total of $12 in profits from those sales, which gives us currently a balance of $372.38 that we are looking to see which stocks in the past sent us a possible buy alerts. We didn't receive any today, so we'll have to take a look at the past several days or going on into next week, see if we were able to buy something. All right, we recently just sold a few shares of our day trading stocks. We're up to $600, but we still only have roughly $372 to purchase a stock with. And going over last week's buy triggers, we have one stock that I would be interested in buying, and that's Visa, which is a V, is their ticker symbol. And you can see that price 4 days ago, 4 days ago, we had price move back above both averages, and then the next day we had price cross the fast moving average, crossed above the slow moving average, and then price has been going up since. And now today we have a green candle, even though we reached a high of over 354, and it's just been dropping all the way back down to 351 as the day progressed. We are in the green, where almost every other stock that I have is in the red. So we are going to purchase one share of Visa. Currently have 0, so we're purchasing one share, which is how much I would have in a book. So we're already at 1 and 351.17, and we got it for 351.14. So with that purchase of that Visa stock, we are done with all of our alerts. So we're going to go back to our standard SPX, our chart for the S&P 500. All right, now we're going to take a look at our chart of the day. Our chart of the day is app 11. And we're going to move over to our 1 day and 2 minute chart. And you can see that they opened at $594, and just like yesterday, it was a nice run up. This run is a nice run because it had just recently dropped a huge, massive drop from 667 to 545, so it went down $120. So this was a nice run today to bring it back up, so where we weren't losing any gains, or where you weren't losing any gains if you were a long-time holder of app. Yeah, so from yesterday's low, we ended up climbing back almost $90 from yesterday's low. So if you're, as I was saying, if you're a long-term holder of app and you did not sell at yesterday's emotional rapid decline, then you're happy today. I know I am. I'm glad I didn't sell. Overall, we are looking at almost a 7.6% gain in AppLovin today. So we'll head back on over to our standard chart, 3-month, 1-day, SPX. And now we will take a look at our actions of what we actually completed today. We sold JP Morgan, Keysight Technologies, and from those sales, we made $12 in profits. We also set a sell order for Keysight Technologies and Yum Brand Foods, and we bought Visa. So those were our actions for the day, our sells and our buys. Now we're going to take a look at what our realized gains were and our portfolio performance. And here we go. So today's realized gains were $103. If you saw yesterday's video, we did over $1,000 in realized gains yesterday. So that was a great day. But unfortunately, the market is a roller coaster. It could be huge up one day, and it could be huge down the next day. So as the markets are going down, it's a little bit more difficult for me to make money day trading with the strategy that I'm implementing. And the main reason it's hard for me to make money day trading when the markets are going down is I do not short. I'm basically a long. I invest long, I trade long, and I bet on the longs. So like yesterday when the day was going up, it was so much easier to make money. But at any rate, we did $103.24, where $12 of that was from my swing trading strategy. Portfolio performance year to date, we're looking at 8.54%. compared to the S&P 500 at 5.32%. The old account, prior to transferring all of the funds to this account, we were performing at 16.26 compared to the S&P 500 at 10.54. And when we combine the two accounts, I'm looking at 24.8% compared to the S&P 500 at 15.86%, which gives me a total improved return over the S&P 500 of 8.94% year to date. So that's one more day down. I hope you all had a great afternoon. I hope you have an amazing evening, the rest of your Tuesday evening. And please like, share, and subscribe so we can help other people. Thank you very much and have a wonderful evening.